This show is produced by the Hartman Media Company. For more information and links to all our great podcasts, visit hartmanmedia.com.
Welcome to the American Monetary Association's podcast, where we explore how monetary policy impacts the real lives of real people and the action steps necessary to preserve wealth and enhance one's lifestyle.
It is my pleasure to welcome Catherine Austin Fitts back to the show. I have followed her work for almost 20 years. She was on the show about maybe 8 years ago, so it's been a while. We want to have her back more often because she takes a very deep look into some of these issues and really thinks of things in a different way, which is fascinating to me. She's an expert in permaculture. She's an expert in the missing trillions of dollars that I'd like to ask her for a follow-up on because I haven't heard her talk about that in many years. And she worked in the White House under George Bush 41 as the Secretary of Housing, I believe. She'll correct my title there, maybe. And we are going to talk about a variety of things today that are threatening your financial future and some opportunities and how to deal with them to have a better future, both financially and otherwise. Catherine, welcome back. It's great to see you.
Great. It's great to be here. I was Assistant Secretary of Housing, the Federal Housing Commissioner. So I ran the mortgage markets. And I also want to say, Jason, how much I enjoy you and your show. When I was an investment advisor for 10 years, and I used to be amazed at so many people who had dealt with financial planners and financial advisors and people, including in real estate, and they felt they could never understand.
Right.
And one of the things about you truly believe that everybody can understand and everybody can learn, and you make the information so accessible and fun to learn that I really appreciate your effort to get us all educated about real estate. I think it's wonderful. Thank
you so much for that, Catherine. You know, one of my real role models on that, I think, was Ronald Reagan, who took complex topics and made them really understandable with metaphor and analogy. And, you know, I just think that's a great skill. And I've tried to copy him on that kind of stuff. So, well, you exude, you can do it, you can do it, you can do it. And then you go through all this complex information and you make it seem, not overwhelming. So I appreciate it. Well, thank you so much. And, there are so many places we can go. I could certainly talk to you for 3 or 4 hours, but we don't have that much time. So let me ask you about the missing trillions of dollars. Many years ago, you were talking a lot in your newsletter, the Solari Report, and on various interviews where I would hear you speak, and on my show too, about how during the Great Recession, about $4 trillion, I believe it was, just... So as of 9/11, $4 trillion had disappeared. So let me roll back. In 1995, we had a budget crisis. And when the crisis happened, it was later described to me by the head of the largest pension fund in the country, who said the people who run the financial system have given up on the country and they're moving all the money out starting in the fall. And if you look at the government system in the Western world and in the United States, you have the bankers running monetary policy, and then the legislatures running fiscal policy. So it's kind of a balance of power between the people's representatives and the bankers. Yep. Essentially, what happened in the mid-90s was the bankers gave up on trying to get the fiscal side of the house to be responsible, and they literally decided to re-engineer government with an effort to slowly have the monetary side of the house take over and run the fiscal side of the house. And it's becoming much more obvious today. And so the step one was in fiscal 1998, which started on October 1st, 1997, large amounts of money started to go missing from the federal government. And the federal government started to admit publicly that they refused to obey the laws related to financial disclosure and financial management. As of 9/11, which was 2001, $4.1 trillion was missing from DOD and HUD. Now, what does that mean? That means our pension funds buy treasuries. The money, our retirement savings, goes into Treasury, and then it disappears out the back door, as far as we can tell. And this is remarkable because you're talking about the largest issuer of securities in the world refusing to obey the most fundamental laws related to financial disclosure or financial management. I mean, complete disobedience to to our own laws. Oh. So $4 trillion by the financial crisis, the number was up to $12 trillion. And of course, we know that $27 trillion was essentially gifted to the banks, the European and US banks, or someplace else. So according to the TARP IG, the total bailouts were $27 trillion.
That is in addition to what was then 12 trillion. In 2015, the largest amount went missing from the federal government of all the years from 1998 to date, and that was 6.5 trillion in fiscal 2015. And I started to talk about it publicly because this is an astonishing amount of money. People always say, how can it possibly be that much missing? If you issue treasuries, if you can issue treasuries to, an infinite amount, you can disappear an extraordinary amount of money, including if you issue both treasury and agencies off balance sheet. So another topic.
Where would you suspect that this money went? I mean, just
I'll get there. Let me get to the total of what's missing.
Okay. Right.
So in 2016, a professor from Michigan State University heard me talking about the missing money and assumed I had to be wrong. There's no way you could go lose 6.5 trillion in 1 year at DOD when the Army budget is less than $1 trillion. It's 6 times more than DOD's budget. Yeah. So he went to the financial statements to check on me, and it turned out I was right. And he called me and said, how can I help? The way he helped is he and his students did a complete survey of all the DOD and HUD documents from fiscal 1998 to 2015. And he got the number up to 21 trillion. So now we published the report in 2017. If you go to missingmoney.solari.com, you can get all the documentation that we published in 2017 in many years. We've done many publications since. Anyway, at the time that we published, his name is Dr. Mark Skidmore. At the time we published his report with 21 trillion of undocumentable adjustments through fiscal 2015.
That's a year of GDP, basically.
Yeah. Guess what the outstanding treasury debt was at that moment in time?
About the same? I don't know.
$21 trillion.
And now we're at 34 trillion, right?
Right. But let me point out the challenge here. So instead of having $21 trillion of debt, or now $35 trillion of debt, the Treasury could have just issued the currency itself with no debt, right? Mm-hmm. So we could have just issued greenbacks. Lincoln was trying to issue greenbacks. He got shot. Kennedy was trying to issue greenbacks. He got shot. Andrew Jackson tried to shut down the central bank. He got shot, but he took the bullet and lived and managed to shut down the central bank. But there's a long history of presidents who try and just issue the currency without debt being shot. Anyway, but there's no reason we have $35 trillion of debt. We could have just issued the currency, right? Mm-hmm. So that's sort of financial problem number one. Financial problem number two, when we issued the 21 trillion and the money went into the Treasury refused to produce audited financial statements and appears to be missing $21 trillion. Okay, and again, approximately 50% of that money came from our pension funds. Right. So a lot of pressure was put on the Treasury and the Department of Defense and HUD to produce two things. One is audited financial statements, but then to describe where did this money go and how do we get it back? And suddenly in 2018, as a resolution to this pressure, the federal government instituted a new administrative policy called Federal Accounting Standards Board Advisory Board Statement number 56. I call it FASB 56 for short. Have you heard of this yet, Jason?
I have not heard of this.
Okay. So remember the Kavanaugh hearings?
Yep.
Okay. This came out during the Kavanaugh hearings, and most people didn't notice.
Well, they were busy accusing Kavanaugh of all sorts of things that happened in college, right? So,
right.
Didn't happen.
Very salacious things. Right. Okay. So Statement 56, FASB Statement 56 comes out during the Kavanaugh hearings, and it is approved by the House and the Senate, both Republican and Democrat, issued through the White House. So we have the Trump administration and all Republicans and Democrats, House and Senate, all agreeing with the Trump White House to do this. And what FASB Statement 56 says, and there's a lot of information about it at missingmoney.solari.com, is the federal government, by a secret process and a secret group of people, can secretly move a portion of its books secret. So the federal government can keep secret books. So can 150 related agencies and commissions. And when you combine it with the classification laws, also all the big contractors and defense companies and banks that do business with the federal government. What this means is, so imagine this constellation of 24 covered agencies, 150 plus commissions and other related agencies, and all the big corporations and defense contractors and banks that do business with the government. So make a guess. What portion of the U.S. securities market is that? 60, 70%?
Oh,
a big piece, a big number. Okay. What it says is they can all keep secret books.
Mm-hmm.
So what they're saying, as a matter of administrative policy, they don't have to obey the Constitution, they don't have to obey the financial management laws, and they don't have to obey the financial management regulations by an agreement of administrative policy, which can't possibly be constitutional, but they did it. And since then, essentially, the books and records of the US government, to me, they're essentially meaningless. I don't know what they mean because I don't know what part got taken out.
And this is not a rounding error. This is, equivalent to an entire year of the country's productivity. It's absolutely insane. Catherine, we've got so much to cover, though. Just bring us to a point of what does this mean to us, other than the fact that we can't trust our government or our banksters, obviously.
So here's what's important, because I think the important thing is, if I own property, how do I optimize and grow my equity? That's what I'm concerned about. And how do I do that in a way which is appropriately risk managed? So what I want to know is, at the day-to-day level, what can this mean to me? The first thing it means to me, basically having an out of control federal financial system, the first thing it means to me is inflation. And I don't need to tell anybody on that call that now, because they're experiencing it.
Right.
The second thing is, it's part of an operation that's trying to centralize control. So the monetary side of the house is trying to take control of the fiscal side of the house, and they're doing it in a way that centralizes economic and political power. So in 2019, the central bankers voted on what's called the Going Direct Reset, which is essentially a consolidation of the process that started in 1998. So if what started in 1998 was a financial coup, the Going Direct Reset is a way of consolidating that process. So essentially, they voted in August 2019 at Jackson Hole. The next thing that happens is the Fed goes into the repo market. We inject $5 trillion through the pandemic straight directly into Wall Street and shut down Main Street. Now, when you shut down one group of businesses and you inject $5 trillion available to the other group of businesses, what happens? You get a taking.
Yeah.
Okay. And that's what happened. If you look at the plans underway for other pandemics or other operations like that, they're building up to more takings. And I think problem number one for a major property owner investor is, how do I manage my way through a great taking, particularly if I have a lot of debt? Because one of the ways they control is by putting countries and investors and, even families in a debt trap. Okay. So if you go around the world and you talk to all the leaders who are trying to stop the WHO Treaty, which is the ultimate real estate taking mechanism that I've ever seen, if you talk to the leaders who are trying to stop it, what they say is, if we don't go along, they'll cut off our lines of credit and we're in a debt trap.
So this is the WHO treaty you're talking about. And
no, I'm talking about
real estate taking. So.
I'm talking about the IHR amendments. So there are two things. The first thing is the IHR amendments to be approved this year. The second is the treaty, which they're now calling a pandemic agreement, which the difference between the two amendments, in theory, are supposed to be able to be passed by the members without taking it for ratification. A treaty requires, for example, in the United States, Senate ratification. So the approval process is much more demanding and strict. Now, if you look at where they are, my understanding is they have not gotten the votes they need to get the amendments through, and they're trying to bluff their way by saying they do. And this is one of the reasons we're watching at least one assassination globally, as I suspect is what's happening. But anyway, so there's tremendous tension. I did an interview with Sasha Latypova that's up at the Solari Report that goes in depth. The way the WHO works is, first of all, it enables surveillance at the neighborhood level, very invasive surveillance. Then what it does, and again, this will work through national offices, it establishes a process where you can assert jurisdiction in a neighborhood at a town or county level based on finding pathogens in that place. So I can come into your neighborhood, Jason, and I say, you have a pathogen in your septic tank. We need to quarantine this neighborhood.
Wow.
Right. And so you can lock down a very defined scripted place.
And who gets to do that? A foreign power, a non-governmental agency?
So what you want to look at, the WHO is designed, my understanding is the WHO is designed to work through national offices.
Right.
So the WHO will do a variety of surveillance and different functions, but the implementation and the sort of chain of command will work through a national office. And I'm assuming, depending on your jurisdiction, it will roll down through state and local. Now, as you know, under the law, the federal government does not have jurisdiction of health. The states have jurisdiction. And so the question is, do you have a state governor and local sheriffs who can assert state authority and stop this kind of, it's really a taking machine. It's funny, as Assistant Secretary of Housing, I got quite an education in how real estate grabs work and how government is used to do real estate grabs. You know, some call it gentrification, but there was at HUD, you could see a lot of grabbings going on. I've never seen a more powerful infrastructure to take real estate, as both the amendments and the treaty now agreement is what they're calling it. Anyway,
it's interesting, many people who are concerned about these types of things are buying bug out locations, right? And if you have water on your land, the federal government has jurisdiction over that pond, that lake,
right,
whatever it is. And if you have a ham radio license, the federal government basically has an automatic preemptive search warrant where they can come in and inspect your equipment anytime they want. So you got to be careful of these things, both from just a search and knowledge point, but a control point and a property grabbing point of view as well.
So one of the things I want to stress, there is no away.
Yeah.
We've had for decades a group of people working steadily, often behind the scenes, to centralize control, and digital technology gives them extraordinary powers to do so. So they're trying to exercise centralized control. Most of us have been looking for a way to avoid them or get around it or just, survive despite. And my message is there's no, the Cook Island Trust will not protect you from this. Going to Switzerland will not protect you from this. Moving your money, into 20 different jurisdictions and complicated structures will not get you away from this.
Tell us why that won't work, those things.
Because we have a group of people who are trying to centralize political and economic control if they get financial transaction control. And many people think of financial transaction control as CBDCs, but they can do it without CBDCs. If they get financial transaction control, they're going to control everything. So when the World Economic Forum says it's 2030 and you have no assets, they're serious. They are very serious. And if they get financial transaction control, they can relieve you of all your assets and all your rights.
We've all heard of capital controls, but when you say financial transaction control, what does that really look like? I mean, it's a lot more than know your customer. What is it? I got to just mention something before this, just from a practical purpose. And I was talking to someone about this, recently. I've had a few conversations like this. Catherine, I cannot believe the amount of time I spend nowadays on banking. I mean, I always thought banking was this thing that was just part of the infrastructure that was just there when I needed it. Now, banking, every week, I spend hours, it seems like, on freaking banking issues. I mean, just in my, I have all these different entities, just like you said, right? I'm doing all the structures. And
that's good.
It is so complicated to move money around, to do anything anymore. I just cannot believe that. And I thought this was mostly a result of the Patriot Act. But, tell us about what do these financial controls look like?
Imagine being a herd of livestock and three sides of the corral are up, and now they're slowly putting into place the fourth side of the corral.
Yeah,
so I'm glad you asked that question because I want to show you 4 videos.
Okay.
I think the way to understand total central control through digital. Now, remember, this depends on an all digital system.
Right.
And this is why we want to preserve cash and checks.
Yep.
Cash and checks may not seem so convenient.
Cash is a form of privacy and human rights.
Right, exactly.
Yeah.
So we want to do everything we can to preserve cash and checks. But let me show you these 4 videos, because the way to understand this system is not for me to tell you what it is. It's for me to show you the central bankers telling you what they plan on doing. The first video is from a 2020 IMF panel with Augustine Carstens, who's the head of the Bank of International Settlements in Basel, Switzerland, which is essentially the central bank for all the central banks.
And I will be in Basel in just a month or so myself.
Oh, wonderful. Yeah. Wonderful. It's beautiful this time of year.
Yeah.
Anyway, so this is Augustine Carstens explaining why he likes central bank digital currency, CBDC.
CBDC in particular for the use of general use, we tend to establish the equivalence with cash. And there is a huge difference there. For example, in cash, we don't know, for example, who's using a $100 bill today. We don't know who is using a 1,000 peso bill today. A key difference with the CBDC is that central bank will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability. And also we will have the technology to enforce that. Those two issues are extremely important, and that makes a huge difference with respect to what cash is.
Let me first tell you what he just said. First of all, he said it's not your money, it's his money, right? It's a central bank expression of liability. It's their liability, not your asset. That's the first thing he said. The second thing he said is he can make the rules of how you can use your money, and he can control and enforce them centrally. Okay, that is total control of your money. Yep. Okay, the next one is Bo Lee, who is a deputy managing director of the IMF. This is in 2023. He's a former Bank of China official, and he's explaining the programmability of money, which means integrating into money complex rules of how and when and where you can use it. Okay, so let's watch Bo Lee.
And if they don't like your social credit score, they can restrict the time you can use it, what you can use it for, where you can use it. I mean, it's so scary.
It's total control. So if you don't sell me your property, I want to buy your property, you don't sell me your property, I turn off your money.
Yeah, scary. Right. Okay, here we go.
The second aspect that CBDC can help improve financial inclusion is because of its legal tender status. Because CBDC is an obligation of central bank. And the obligation of central bank is a legal tender in every country. So it is widely accepted. That creates potential value for everyone to use it. And finally, the third way we think CBDC can improve financial inclusion is through what we call programmability. That is, CBDC can allow government agencies and private sector players to program, to create smart contracts, to allow targeted policy functions. For example, welfare payment. For example, consumption coupon. For example, food stamp. By programming CBDC, those money can be precisely targeted for what kind of people can own and what kind of use this money can be utilized. For example, for food. So this potential programmability can help government agencies to precisely target their support to those people who need support. So that way can also improve financial inclusion.
They're always doing it for our own good, aren't they?
So imagine during the lockdown, if they could have enforced all the different rules and regulations, literally from New York or Washington or Basel, Switzerland, so they could determine whether you could leave your house, what kind of food you could buy. We just did, Jason, an incredible Solari report on pharma food, including synthetic lab-grown meat. It's the most frightening thing I've ever read. And I realized, financial transaction control is the marketing plan, because no one would ever eat this stuff. You would never voluntarily buy or eat this stuff. And I realized, but basically what they can say is the only food you can buy with your money is pharma food. Yeah. Anyway, the next one is Richard Werner, who is my vote for the top academic scholar in the world on central banking and banking. He wrote the definitive book on the Japanese central bank called The Princes of the Yen. He's been consulting with the Chinese on what they're doing in the currency area. He and I were in Malmo, Sweden together in May of 2022. We were on a panel and Richard told this story. So this is Richard Werner in Sweden in 2022.
Yeah, and I also shared the stage with him at a conference where we were both speakers of about a year and a half ago. So
yeah, absolutely first rate.
Right, here he is.
It's possible that even if you have to have CBDC in some form, that you're not destroying the banking system, if you do it the way China is doing it, now you have to remember China only recently introduced their banking system, and it seems they were not willing to already give it up. They have already CBDC. It's still a pilot project, but it's introduced, among millions of people already. But it was introduced on purpose in such a way that it would not harm the banking system, and therefore is a more truthful sort of update of the old paper money. But of course, it still has the control aspect. So at least it's not killing the banking system. The way they do this is by requiring you to have a bank account in order to get CBDC. So it's not a direct account at the central bank. It's only through your bank that you can get it. You see how simple that is, and of course could be done over here, but they're not discussing it. In say the ECB is not discussing it because you see their agenda is to get rid of banks. But this alternative exists. But then, of course, the key problem is this control aspect, which at the moment they haven't stepped up in China, but that can be introduced any time. And that, of course, is a concern. Also, they never talk about the nature of this CBDC. What is it actually going to look like? They never talk about that. But I heard one European central banker tell me what it's going to look like. He saw it. He was invited to one of the old central banks in Europe that are very much promoting this. And they showed him. And, he's a top, executive director of another central bank in Europe. And there's no reason to believe that he was telling me a story. And he was around this large and would be implanted under your skin. So that is the plan. And of course, that has other implications on top of what we've mentioned, on top of the control aspects, because that actually enters your body, in my view, violates human dignity, and can be then used for, in terms of functionality, beyond the monetary and economic transaction purposes. So highly dangerous and definitely something we have to oppose. And so using cash is one of the things we can do to make sure that the hurdle will be higher for the central planners to introduce the CBDC.
We had a telecommunications executive at the World Economic Forum say by 2026, somewhere in there, everybody's going to have a chip in their hand. And we know that, some of the Scandinavian countries have absolutely promoted this and with employers promoting it. Okay, the last one is Neil Kashkari, who's president of the Minneapolis Fed. So the Federal Reserve System has 12 banks, of which the Minneapolis is one of them. So this is one of the 12 bank presidents telling you what he thinks of CBDC. So let's watch.
I keep asking anybody at the Fed or outside of the Fed to explain to me what problem this is solving. I can send anybody in this room $5 with Venmo right now. Right? No, seriously. So what is it that a CBDC could do that Venmo can't do? And all I get is a bunch of hand waving. I get maybe it's better for financial inclusion. Maybe it's better for cross-border remittances. Maybe. Is there any evidence that it is? And, they say, well, what about China? China's doing it. Well, I can see why China would do it. If they want to monitor every one of your transactions, you could do that with the central bank digital currency. You can't do that with Venmo. If you want to impose negative interest rates, you could do that with the central bank digital currency. You can't do that with Venmo. And if you want to directly tax customer accounts, you could do that with the central bank digital currency. You can't do that with Venmo. So I get why China would be interested. Why would the American people be for that?
I'm curious as to the answer to that question. What's the case he made, I wonder?
Well, there is no case. The reason you would do it, if you're the bankers and you basically want to use a social credit system and financial control to institute the entire fiscal side of the house, it gives you the ability to tax without representation, and it gives you the ability to institute all laws and regulations through a complex rule system, software, and AI. So literally, you don't need a fiscal side of the house. You don't need representation. You just institute complete control, and you can create and make all the rules and enforce them centrally and literally make the fiscal side of the house go away, or make it, if you leave it in place, it's simply theater.
Mm-hmm. Yeah.
So, right.
Okay, so Catherine, what do we do? Last time I interviewed G. Edward Griffin, he said, you just cannot let this happen, the CBDC.
He's absolutely right. So yeah. The number one risk to your equity right now as a real estate investor is political risk. Okay. What it means is, when I was Assistant Secretary of Housing, I said, where are all the honest people? Well, they were busy doing their work. It was always the dishonest who were coming to lobby me for a freebie, right? So the honest people have to get engaged. Now, what you find is particularly in the good jurisdictions, you have legislative leaders at the state level And you have community bankers, so banking leaders at the community banking or credit union level who understand what's coming and want to stop it. And it's absolutely essential that you find them and you support them. So our hero of the year last year on the Solari Report, we have a hero of the week and a hero of the year, was Senator Frank Nicely and Representative Bud Halsey. And our team made a command decision at the end of 2023 that we were going to spend an extraordinary amount of our time and money this year helping state legislators, finding the Frank Nicely and Bud Halseys of every state and doing everything we could to support them. We'll be publishing in our next hard copy. It's basically on how the states can stop the coup and reverse it. And you have extraordinary leadership at a state and local level. And under the Constitution, they have extraordinary powers under the Constitution to stop it if they can get 5 to 10% of the business leadership in their constituency to see the problem, take responsibilities for the problem, and support them. So this is going to take a coalition of business leaders and political leaders at the state and local level. Now, there's some very good congressmen and senators, not a lot, but a handful. And even though, you want to throw up your hands at the federal government, they're making an enormous difference. So Senator Ron Johnson has just put together a letter of 49 Republican senators saying, no way, Jose to the WHO. And Thomas Massey is now trying to get through in the Farm Bill, the Prime Act, that will allow independent farmers and ranchers to slaughter at, sort of in local levels. He's put together an interstate raw milk bill, lots of other bills to make independent business and independent income grow. You have got to say, okay, I'm going to budget 10% of my time this year to networking and finding the freedom fighters at the state and local, and if I have one, the federal level, and doing everything I can do to turn the ship. Now, let me tell you what it's going to take to turn the ship. And again, there's extraordinary amounts of information at Solari. We have a wonderful memo. What is financial transaction freedom? What is it? What threatens it? How do I stop it? We have another article called, I want to stop CBDCs. What can I do? So there are many, many things you can do. But right now, if you look at our state money, our local money, and our personal money, we're financing the other team. The people who are centralizing control, we're financing them. We're sending our money into their banks. We're putting our investments into their situation. If you're a good real estate investor, luckily you've diversified some money out of that machine at least. But for example, if you look at most state houses, they're shipping all their bank deposits to New York, where the banks who are engineering this get the benefit of those deposits. So we're financing this, and this requires us to start shifting the money. We're going to have to start decentralizing the control of our money. 150 years ago, every family controlled their investments. Now we've outsourced all that control of our assets, family assets or family business assets, up into highly centralized institutions and organizations.
I want to share an example that you gave many years ago, maybe on my show, or maybe I heard it somewhere else, but it was where you were at a luncheon with some different people, and you were overhearing the conversations, and one person was talking about how they borrowed money to do one thing, and another person was talking about how they deposited or lent money or invested. And you realized that basically what we were doing is letting Wall Street intermediate these transactions that could have been disintermediated between the parties directly. And right. I thought that was very interesting. They take a huge handling fee off the top and exert an awful lot of control over us when they do this.
In that precise example, it was a 2,000 basis point arbitrage.
Wow.
So one person was putting their money in a local bank CD who had as a correspondent bank. So the money was going up to one of the New York Fed member banks.
Right.
And they were getting approximately 4%. No, they were getting, at that time, 2%. The next person had stock in that same New York Fed member bank. And in fact, they had been losing money. They'd been getting a dividend, but with capital losses, they were down. And then the third person was borrowing on a credit card from that bank and paying over 24% in interest rate.
Unbelievable.
So there was a 2,000 basis point spread between these three personal friends.
Yeah. So how do we solve that? I mean, a lot of the tech platforms are disintermediating these types of transactions, which is great. And of course, cryptocurrency, which, I'd love to hear what you say about Bitcoin, and then inflation in general and what our future looks like vis-a-vis inflation. But talk about some of those.
Okay, so the first thing I want to say is my concern for the next 12 months, if you're a real estate investor, is there is going to be an effort to consolidate the banks. What we saw in California with SVB was just a little prototype of what could potentially come. And so you need to make sure, if you are depending on banks for your transactions, one, you're banking at a bank, ideally a good community bank, that where the decision makers and they are very well governed and well capitalized. Okay, that's number one. And number two, you want to make sure that they know how to insulate themselves from an engineered bank run. Okay. And what I would recommend is that you have at least 2 banks and probably a brokerage account. So if for some reason you need to jump out of a bank fast, you have the wherewithal to do it. At the moment you have to jump, you already have a relationship and a place to jump to, and you can do it like that. You don't have to go open an account. If you look at what happened to SVP, the people who had to go open an account and get their paperwork and get, a lot of them were stuck. They couldn't move fast enough. Okay. So the first thing you need to do is you need to look at your banking relationships. I don't want to bank with the criminals. I think it's dangerous. I want to bank with
who are you going to bank with then? They're all criminals.
Are you kidding? No. I have the world's most wonderful bank. I'm not trying to promote because it's run by my cousins. So right now I'm in Pennsylvania, and my mother was a Philadelphia Quaker. And I have cousins who've been in the banking business for 4 generations. They're absolutely fantastic. Their bank is ridiculously overcapitalized, but they are people who've been running the business day to day for decades. They know every penny. It's very conservatively managed.
Okay. So you've got a sort of bank. Yeah. Okay.
It's a great bank. But something, Jason, there are lots of banks like that.
Okay.
So find a good local bank, but I can pick up a phone and call a decision maker at my bank anytime I need one. And my bank knows me. So I'll give you an example. I was in Italy and I was there to see Beethoven in the amphitheater. I was in Verano, and I'm walking down the street, and it's National Bank of Malvern, my bank. The phone rings, and I answer the phone, and they say, "We don't know who just charged $500 at Paris Disney World, but we're pretty sure it's not you." Yeah. And I said, "You're right, shut down the card." They caught it like that, and it took, it was lickety split to get a new card. I didn't have to hang on the phone for 5 hours. And I can tell you scores and scores of stories. So you want a bank where people, they know you have a relationship, and you have choice. You have more than one. Okay. And so we have a wonderful Solari report on how to build a successful relationship at a great bank. It's a 4-part series. So just make sure you do that. Okay. The other thing you can do is there are enormous number of local investment opportunities. Real estate, yes, but there are business opportunities. There are community development banks. There are food co-ops. There are farmers. There's farmland and land leasing. There are many ways you can take steps to invest wisely that disintermediate you out of central control. You do not have to go to Treasury Direct and give money directly to the Treasury that's going to disappear out the back door, right? Anybody who's a successful real estate investor knows you want to know where your money is and why it's there. And then, of course, I love precious metals, but to me, precious metals is simply central bank insurance. And it will help protect you against inflation. And now that the states are getting more and more interested in using precious metals in a variety of ways, it's going to put pressure to support the market and the price. And then if you look, the best kinds of investments, I think, if you look at your infrastructure, is what can you do to make your household and your physical infrastructure more resilient, both in your home and your property. So anything you can do to permanently invest that lowers the cost of energy protects you against inflation. I'm always telling the story of the client I had who was very upset about the yield on her stock portfolio going down and her water bill going up. And she would complain chronically about it. Said, this is simple, sell some stocks and build a well. She was in a rural area. She could do it. So anything you can do to decentralize and disintermediate big institutions out of your balance sheet and financial statements is worth considering. And of course, one is, even though I love what leverage can do, particularly in real estate investment, you need to be prepared to gut your way through war scenarios. So if you carry debt, just make sure you have a plan in a bank consolidation and a war scenario that you can work your way through without losing a lot of equity if you lose a property.
And it always seems like it's about a 2-year cycle you need to be prepared for.
Right.
Because that's when so many people let go and they lose money on any asset class, not just real estate. If you can make it through a tough 2-year time period, right, you're probably going to be pretty good. And then the central planners, of course, will do what they do, which is loosen the credit, loosen the money supply. Usually that's pretty much always their reaction to things.
So to me, one of the best ways to invest to make it through a 2-year period is to do everything you can to lower your costs of your infrastructure. That's why I'm saying if you can institute energy efficiencies or energy systems that dramatically reduce your need for cash to buy energy from outside, that protects you.
It's the same rule of any business. The killer of any business is fixed cost overhead. Right. When you can scale your overhead and make it bigger and smaller, depending on what cycle you're in, then you're okay. Right. I mean, my businesses could almost never fail. I mean, I never want to say never, but because they're very lean and they can scale up, they can scale down quickly. But in the old days, when I had more traditional brick and mortar businesses and had multiple offices that were very expensive to maintain, that was a different story. That was a much more risky proposition. But Catherine, I know you believe that inflation is our future, and feel free to comment on that if you like. I'm dying to know what you think of Bitcoin, because I've never heard you talk about it.
So here's the thing. I'm the kind of person who loves private currencies. Yep. At the same time, Bitcoin, in many respects, is a prototype to get us to go to an all digital system.
And maybe Satoshi is the government or the CIA or the IMF. We don't know.
Well, but the perfect world is a world where we have a balance of analog and digital. Mm-hmm. And in both analog and digital, we're free to do our own currencies if we want to. That's the perfect world.
Right.
We don't live in that world. And the reality is, if you look at how Bitcoin has been used and can be used, I think it can be used in very nefarious ways. The other thing is, I think it can be shut down and controlled very quickly. So the idea that the leadership of the financial system can exercise, fantastic control quickly of Bitcoin, I think is a pipe dream.
Yeah.
Now,
there
that
are
said,
only, a couple thousand nodes in the world, and you could easily see police forces around the world coordinating and raiding all those node locations. It's not as invincible as people think. And what I've always said is that, look, the main product of any government or central bank, and, of course they work together, is their currency. That is their product. And just like any business, no business loves competition. Right? They don't want to give up control of their main product. They want that to be the thing.
Well, but I think they've
That's
used
why they have
Bitcoin.
legal tender laws.
I think they've used Bitcoin very cleverly.
Mm-hmm.
I mean, Bitcoin has served a variety of different functions for the leadership, one of which is to keep people out of gold and silver. So while the central bankers are accumulating more and more gold and silver, they've been pulling retail into crypto. It's a very clever strategy. And they've also been able to pump and dump crypto in a way that helps get an entire generation of developers, helping them figure out how to do essentially an all digital financial system. So they've got all these guys kind of working for them for free.
Right.
And they've also been able to pump and dump it in a way that gives them a lot of control of that world. So unfortunately, to me, Bitcoin is a prototype, and it's one I empathize with because I love private currencies.
Yeah. Yeah.
Now,
okay. So inflation in general, tell us about your opinion of our future inflation-wise, I don't think you believe deflation is coming, but
So deflation could come if they are successful in starting World War III. And there is a concerted effort right now through NATO and the Article 5 process to start World War III. And just like pandemics, they're developing a scenario for the next pandemic, and that is a shock. So the way you do takings historically is you shock an economy and then you take. You shock and you take.
Yep.
And there's scores of different shocks. And sometimes I have a fantasy of the different cartels, planning out different ops and trying to persuade Mr. Global to choose their op. But, we could be in for another pandemic and using the WHO surveillance network and another pandemic to shock with health. But the shock could be World War III, whether you turn the Middle East into World War III, or you turn Ukraine, or both. So there are a series of engineered shock that are highly deflationary. So the monetary authorities, so the central banks, inject massive money, but targeted essentially to the insiders. And then you shock the outsiders in a way that makes it really attractive for the insiders to take that money and buy assets cheap or take them. So let me give you an example. I inject money. Meantime, I announce a new pandemic, bird flu, and the WHO surveillance network identifies your neighborhood as having a pathogen. We quarantine your neighborhood. We shut down all the businesses. I've got a world of cash and I can come in and buy assets cheap, right? But that monetary inflation has been offset by the deflation caused by the shock, because when I shut all those businesses and economic activity down in quarantine, I've got a deflation to offset my inflation. Does that make sense?
Yep. I know there's maybe a temporary deflation shock in the event of, World War III or any kind of scenario. Of course, COVID should have been deflationary had they not, done the
but it was. You shocked Main Street.
Right. Yep.
You injected money into Wall Street, very inflationary.
Yep.
But you shocked Main Street, and that kept the inflation down while that money was moving in. And it's very interesting because I remember Larry Summers, who used to be a governor, not Larry Summers, it was one of the former Fed governors, gave a speech to one of the Swiss investment firms I used to work with, and basically, said, okay, they just injected this $5 trillion down the road, a couple of years from now, there's going to be massive inflation. So we knew it was coming, but that shutting down Main Street, was a temporary deflation that offset it for some period of time.
Yeah. Okay, Catherine, anything I haven't asked you, anything you just want to say as we wrap up here?
So the most important thing to your investors is, who can you count on? Who can you count on locally? Who can you count on in your state? Hopefully locally, you've got a great sheriff. If you don't have a great sheriff, you better get one. Because remember...
And probably no one listening is paying attention to who their sheriff is. So.
You better go figure out who your sheriff is, because what we saw during the pandemic, sheriffs who insisted on constitutional protections saved the businesses in their jurisdiction a fortune. Businesses were able to stay open and thrive. You want to have a relationship with your sheriff before you need it. Okay. And if somebody tries to say there's a pathogen in your neighborhood, they want to quarantine and shut down your businesses, that's when you need a sheriff you can count on. There are freedom fighters in almost every state legislature and every local legislator. You want to know who they are. You want to support them, because we've got a lot of dirty money moving in right now into the state primaries, trying to kick the freedom fighters out. And you care. You want to have great relationship with your banks, and you want to have choice. If you have to jump out of one bank into another bank quickly, you want to be prepared to do that. And as you said, 2 years of cash reserves, whether it's, NATO trying to start a land war with an Article 5 in Europe, or the Gaza situation blowing up even, much worse than it is. You want to be able, if there's, whether the shock is a pandemic or the shock is a war, you want to be able to work it through without getting yourself in a corner or getting squeezed. So that's the kind of resiliency you want. Anything you can do to invest in permanently bringing down your overhead, get it done as soon as you can.
Catherine Austin Fitts, thank you so much. We really appreciate having you on, and let's do this more often.
Okay, thank you, Jason. Again, thank you for making all of this understandable for all of us. We really appreciate it.
And you as well. Thank you.
Bye.
Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.